Welcome back. You're seeing some of the markets under a little bit of pressure here in the pre-market. You see that 10-year yield going above 2.8%. You're seeing cryptocurrency prices under a little bit of pressure. Hence, you're seeing the Dow, the S&P 500, and the NASDAQ all in the red. But let's chat more about these things with Michael Antonelli, Baird Managing Director and Market Strategist. Michael, great to see you always. So, Julie and I have been going back and forth on this potential for a recession. Goldman Sachs out this morning with a pretty big call. What say you? Is a recession coming later this year? And is it in any way priced into markets?
First of all, great to see you guys back in the studio. You just absolutely love to see it. Remember, whenever you see or hear in the media or from Wall Street, odds of a recession, it's always between 35 and 40. Remember, that's the default rule. There's a reason why that's the case, but it's always 35 to 40. I don't think that we have a recession. I'm going to go in the no recession camp for this year. Now, when I lean into these kind of things, I think about the past, I think about evidence, I think about probabilities. If you use the yield curve inversion as your signal, which we all know it's a pretty good signal, the shortest a yield curve inversion has led to a recession is 6 months. That was back in COVID. The longest is 33 months. The average is about 17 months. So unless you think that the recession is going to come faster than it did for COVID, it's somewhere out in 2023, possibly 2024. So my thought would be right now, companies are hiring, businesses are still expanding, people are working and spending money. You'll hear that employment's a lagging indicator, and it is, but you generally tend to see employment slow going into a recession, and it's not slowing. So I don't think this year, if it happens to be somewhere out into next year, 17 months from the inversion. So now you're talking somewhere into 2023, maybe into 2024. I just don't think it's imminent right now.
So, Mike, that's the economic backdrop. Let's talk about what's happening in the markets, because it feels like the last couple of weeks there's been a shift of some kind, sentiment shift, a reactive shift. Do you see that shift, and what do you think is going on?
Well, you look at some of the Senate readings; they're really bad. Like, they are really bad. The AAII data is at a level where recessions usually end. Bank of America puts out that fund manager survey. You're looking at cash overweight by a couple standard deviations, equity underweight by a standard deviation. These are the kind of things you see when the news is as bad as it gets and you're in a recession. So we ask kind of what's priced in. When I see those kind of sentiment data, you have to think a lot of negative news is priced in, but the S&P is only down 7%. We're in this kind of weird stage where companies are acting kind of strange. Stocks are trading kind of strange at the industry or sector level, but the overall market is only down about 7% as measured by the S&P. So, we've had this real headwind tailwind thing between kind of strong consumer behavior and then a headwind of the Fed or a headwind of really bad economic data. So. I am not in the category, again, of a recession, but I do think that what's priced in is definitely a lot of negativity. And that, my friends, is important when we're thinking about price action here in the kind of over the short run.
Then, Mike, why are these calls even popping up?
You're kind of forced to say something right now. You have all these signals that have ticked off. You have clients who are worried about inflation. You have clients who are worried about a slowdown. So Wall Street feels like it has to say something about an upcoming recession, especially with what the Fed's doing, like I said, and all these indicators. I kind of have never been in the camp of trying to predict that. I think Morgan Housel, somebody said there's a recession will happen. Just don't know when and where and for how long, which is ultimately the right answer. But I do think that people are having to make this call because there's just so much going on geopolitically and economically and with rates. So they're kind of forced to make one of these calls.
And so in the meantime, as this is the backdrop, what do you do from a strategic perspective?
I spent a lot of time on the road over the past week talking to my teammates, talking to clients, just trying to figure out what's on their mind and how can we help from here. And when we're times like these, I tend to look at just relative strength. If I can't really get a sense for the market, if I can't get really a sense for the trend, I kind of just continue to look at relative strength. So I look at kind of 3-month relative highs. Those are staples, energy, materials. 3-month relative lows are the technology, consumer services. Communication services, financials. I just try to stay overweight the stuff that's working right now. And then I just remind people that there's been lots of recessions throughout history. At the end of World War II, there was a recession due to high inflation. It was a mild recession that lasted 11 months. Recessions don't necessarily have to be these horrendous experiences like we've been having over the past few decades. There have been plenty mild recessions in history. That's a relative term, obviously mild. But I just keep telling people to stick with what's working, and those are the staples and energy and materials right now.
Hey, Mike, switching gears, I would say you're among one of the founding members of the financial Twitter community, very active out there at all times. What do you make of this battle between Twitter and Elon Musk? Do you think Musk would bring certain changes to the platform that would make your life better?
I look at Twitter as kind of the public space like a lot of people do. I spend a lot of time there learning from super smart people. I spend a lot of time there engaging with journalists from all over the world. I love it. If this deal ends up falling through and Musk doesn't end up acquiring the company, I just want the board to come out and say what they're going to do to improve the service. Are you going to sell verification? Are you going to create communities? How are you going to ramp up this company and for not only its users, but its shareholders? I want to see something good come out of this no matter what happens. But I do think that they need change. Look at what what Jack said about the board. I think they do need change in this company. I'd also like to see the board own a little more stock to get some skin in the game to improve this service. It's an important service. It really is the town square. It's where all the news breaks. Everything breaks on there, especially if you're a trader or in finance. So you have to be there. I just want to see something good come out of this no matter what. And even if it's not Musk, the board needs to step up and say, this is our vision to make this place better.
Yeah, I was just looking, and the current CEO, Parag Agrawal, owns, about 500,000 shares. So I've seen some calls for him to increase his stake. Also, Mike, as a user, what would be your number one change that you would want to see?
I think communities would be great. I've used Reddit a fair amount of my life where there's actually just communities you can go occupy, whether it's finance Twitter, whether it's politics Twitter, whether it's sports Twitter. I'd like to see some kind of segmentation where I can go just interact with people that I really, really enjoy in a defined space. I'd also like to see them embrace Spaces a little bit more. Spaces is great. We have really talented individuals who do CPI prints. Maybe Yahoo Finance starts a space, and maybe all the different journalists out there start really interesting spaces, because to be able to talk about this stuff in real time is valuable, especially for traders or portfolio managers or strategists. I'd like to see more personalities doing stuff in real time, and then maybe ticketed spaces. Maybe you can interact with Michael Lewis in a space and it costs $1 or $2 or whatever. I think there's stuff out there that they have that's good. They just need to really kind of focus it.
Well, just in case Elon's not watching, you should definitely tweet at him all of these suggestions, Mike, because he's definitely taking a lot of feedback via Twitter these days. Mike, good to see you. Michael Antonelli, Baird Managing Director and Market Strategist. Thanks.